Thank you, Elias, for that. I mean, ESG is one of the biggest things in shipping, there's no doubt about it. We're going to see much more of it in the years ahead, I am absolutely sure. That brings us to our last session. We've entitled it Greek Shipping Staying Ahead. We've heard a lot today about the state of the market, about the profitability, current profitability of most sectors, about ESG and technology and propulsion and everything else. So what's the secret of Greek shipping staying ahead? We have as our moderator Mrs. Katerina Stathopoulou, Executive Director of Investments and Finance. And Katerina, over to you. Thank you.
Thank you, Kevin. I would first of all, good afternoon, ladies and gentlemen. I would like to also again thank Kevin and Mia for this wonderful invitation. And finally, after such a long time, seeing people in person and not over a camera. Good afternoon, gentlemen. Happy to have you here. Please allow me to, first of all, introduce my esteemed panelists. Mr. Thomas Lister, Chief Commercial Officer of Global Ship Lease, Stavros Gyftakis, Chief Financial Officer of Seanergy Maritime Holdings, Mr. George Arcadis, Country Executive of ABN AMRO Athens Branch, and Mr. Evangelos Chatzis, Chief Financial Officer of Danaos Corporation. So, gentlemen, I think following the very enlightening survey results shared with us with Mr. Makris and the points raised throughout the day today, let's discuss Greek shipping and staying ahead. So, let me start with Evangelos, please, if you allow me. I'm assuming that Danaos is, you have already prepared or are preparing your ESG reports, and that you're being requested from your financing banks and your stakeholders. How is this affecting your company's ability to receive better loan terms? And what are your investors and customers looking to get out of these increased compliance with the ESG?
Thank you, and good afternoon to everyone. It's true that ESG has been in focus for a few years now. Of course, there was a break due to COVID, but we see it increasingly becoming more and more relevant. We as a company are very much, and the E is the focus right now, right? Because we are public, governance has been at the forefront of what we are in our DNA since we went public. Over the last many years, we've been very socially responsible. We've been very active in giving back to the community. But the E is the focus, right? And at least for the sector that we're in, this is going to depend on what our customers want to do, right? So if you want to get a sense, and of course we are already developing our own ESG report, and we're going to make the commitments that we need to make to take things forward. But I mean, what our commitments ultimately will be is going to depend on where our customers want to get to, because they're the ones that are driving change. They're under increasing pressure from their customers, the shippers, and their stakeholders to address the CO2 emissions issue. I remember in early summer, Hapag-Lloyd's management was heavily criticized in their AGM because they had, of course, increased dividend distributions over the period because they were swimming in cash. And their shareholders said, okay, you've increased dividends so much, why didn't you keep anything back to invest in green technologies? Yes. So our customers are the ones that are under real pressure to address this, and we will follow their lead on what needs to be done in order to invest in the next generation of container ships for which we are preparing. So it's not just preparing a nice report and stating your goals about becoming carbon neutral in 20 or 30 years. It's also what you do as an organization. Our balance sheet is in the best shape it has ever been. We're gradually building up our cash position, and all this is intended to give us dry powder to invest in the next generation of eco-friendly ships when such technologies are available, and more importantly, when the fuels are available for the ships to run.
Good point. We'll come to that in just a short while. We'll pick it up from there. Thomas, as you're in the same sector, I'd like to come to you with the same question. Are you seeing your banks or your clients being affected, or what are they saying? And having had prepared these reports.
Sure. Can I steal that? Thank you very much. Hi, everyone. I feel a bit of an imposter here on the Greek shipping panel, having been here for a total of 6 weeks. So with that caveat, I'll make the following remarks. First of all, I echo 100% everything that has just been said. We issued our first ESG report back in 2019, or in fact in 2020 for 2019, which with the misery of COVID feels like a lifetime ago, but it's only 2 years. And it's certainly an area which we see accelerating in terms of relevance, and that's matched really by the sort of inbound questions that we have on the topic, both from the charterers, our customers, but also from investors and also increasingly from financiers. So yes, highly relevant, and we expect it to remain even more relevant going forward. And in fact, I know there was a panel earlier that was talking about the distinction between sustainability-linked finance and quote-unquote vanilla finance, conventional finance. I think the difference, as we understand it from a pricing perspective, is around about 25 to 50 basis points or thereabouts today. But our instinct is that that distinction will disappear over time. And the market is going to likely bifurcate into people who have a fairly strong set of ESG credentials, and as a result have access to competitively priced finance going forward, and those who don't, who won't. The question is how long that will take, but that's the direction of travel, we think.
Interesting. Stavros, we've debated this together before.
A couple of times indeed.
Yes.
Good afternoon.
Can I
everyone.
have your thoughts, please?
Of course. I'm here to confirm the statistics. I mean, you have issued an ESG report. You have issued an ESG report. We haven't yet. So we are
Okay.
at 38%, and I have
Congratulations,
my
Deloitte.
investor
We have
relations,
just verified your results.
associate breathing down my neck for the last 3 months about that. Having said that, it's not that we are not active. I mean, we have a very visible and actionable ESG agenda. And I can only echo what Evangelos said before. I mean, we have been promoting, and we have been a very strong advocate of the cooperation with charterers to make our vessels more, and the existing vessels more efficient in terms of serving them in a more environmentally friendly way for many years. Actually, yeah, since when Greta was 13 years old or so. And we have done a number of projects in this regard. We are also now involved in testing biofuels again, together with our charterers. We are working with our financiers. We're structuring now. We're actually documenting our first sustainability-linked loan. We have been very active. But I do agree. I mean, what was voiced by Deloitte before, I mean, a proper structured and well-written ESG report is a very good way to engage with your stakeholders on these matters. Now, for the time being, as Evangelos said, I mean, lenders are more focused on the E of the ESG. What they're looking is more, I mean, data on the CO2 emissions of the fleet and how we are progressing to meet the IMO targets and how we compare with the IMO trajectory, which is something that we already do. I mean, we are following very closely. We have installed advanced monitoring systems on our ships for the last 5 years, and we are following, I mean, all this data very closely. We're submitting that to our classification societies. We are engaged again with them on ways to improve the ships. So all these are readily available for the lenders, for the ones that are more interested. Now, whether this would result in better financing terms, sometimes they do, sometimes they don't. I mean, the ship financing landscape is competitive, is healthy right now, so you can get similarly competitive terms also from banks that are not, or at least not yet that much into ESG. And it works also the other way around. I mean, you have Poseidon principal signatories that cannot be competitive. So, and that's something that we are going to discuss even more, I mean, as we move forward in the panel. Long answer short, ESG is good. I mean, it's something further than actually getting better financing terms. It's something that we all need to do, that we all need to see responsibly. I mean, we need to position our industry in the forefront of the global effort for decarbonization, and that's something that at least the public companies in Greece are very well aware of.
Well, I'm happy to have George Arcadis with us, who is ABN Bank, is one of the original signatories of Poseidon Principles. So George, as the banker on the panel, please tell us, how is the bank, or how are the banks treating all this data that they are collecting under Poseidon Principles and ESG? And I'm sure that this is bringing, or I'm asking rather, is this bringing you closer as a relationship to your clients, or is all this data collecting driving you apart? And where does that lead you in terms of loan terms, as your clients have just said?
Thank you. Thank you, Katerina. And thank you, Kevin and Mia, for inviting me to the conference. After almost 2 years, it's the first physical conference, I think. Not that virtual conferences are not nice, but I personally prefer the physical conferences. Well, sustainability is a very important issue. It's actually at the top of our strategy at ABN AMRO. And has been like this for a few years. But I think there's obviously a need to accelerate there. So I would say that among the 3 strategic pillars of ABN AMRO, sustainability is currently the most important one. And to be honest, there is not a single day that we don't discuss about sustainability with clients or internal in the bank. There have been a number of initiatives, including the Poseidon Principles, as you said. And the whole idea, the objective, is obviously for the banks to end up dealing only with clients that have a clear sustainability agenda, and obviously support those clients into their energy transition plans. As far as the Poseidon Principle is concerned, it's an initiative that started only a few years ago. I think this year is the 2nd year that we are going to collect data from our clients with respect to certain figures. And we will be analyzing those figures, obviously, and come up with the results. The whole idea of this is to be able to sit down with the client and discuss about the findings, try to increase awareness, and improve the sustainability dialogue with our clients. But Poseidon Principles is not the only initiative.
Of course.
I have to say that a few years ago, ABN AMRO was the founding partner of the Responsible Recycling group of banks, and currently several banks have joined. And the purpose there is to be able, through also a set of covenants that is documented in the loan agreement, to be able to make sure that our clients recycle their ships in an environmentally friendly way, which is not very easy because there is still, a gap between responsible recycling and the scrapping of the ship. Last but not least, there is also the sustainability-linked loans. I think you all spoke about them. We have done a few in Greece, several others in other locations. And there you agree with the client a set of KPIs or targets related not only to CO2 emissions, but also to safety, training, diversity of the companies. And based on the outcome, there is a reduction of the margin, which can be up to 50 basis points. And I think this is also something that we have been marketing for some time, and it's very well received by our clients. So our intention is to continue with this product because it's the best way, you know, to increase awareness about sustainability matters. There is also, you know, it's like you also give something to the clients.
Yes, of course, I'm sure your clients are looking forward to it. You said something, and gentlemen, you'll allow me to throw a curveball here. You said something, well, you made a very good point about green scrapping. And I would like to ask, how would you be able to control that from your clients? Okay, so you have a borrower, and the companies, I would like to hear their views of how they would be dealing if they need to scrap a vessel during the loan term, and instead of taking it to the scrapyard where they have to tick the box based on your rules that it has to be green, they sell it to a cash buyer and then he takes it wherever it needs to go. Because I understand that that's a little gray zone there. How would you be able to control that doesn't happen? So it is actually scrapped in a green and sustainable way.
Well, it's one of the reasons that we don't finance old ships, you know.
Yes, I know.
But in general, I think...
But it's a good thing that you've joined forces with, you know, banks trying to push green scrapping. But
Well, you know, I'm not an expert in scrapping, but I understand that if an owner wants to scrap a ship, obviously there is an intermediate. And so this is obviously not acceptable. There are specific green scrap yards, as I said. There is still a discount there, and we know that. And, you know, as far as the ships that we're financing, we basically do not allow them to be scrapped in a conventional way, with or without an intermediate.
okay. So you trace
Yeah, exactly.
Somebody else like to, from the companies, tell us how would you be dealing with that?
We are all working for public companies. I mean, usually we don't see the vessels until the end of their economic life. Usually we sell them and we don't scrap them ourselves. I mean, we sell them sometimes well before that. Now, it's an interesting point. I mean, it's interesting because this is redefining a bit how we're structuring loans. I mean, we were always used to know that we have a certain residual value. You're structuring the loan around that. And begs the question, what are you doing with the existing loans? Because they have been structured under a certain philosophy. So you have your scrap value. I mean, you have a certain profile. Now this is changing. So the view that the bank is taking on the residual value and whether they are prepared, I mean, to adjust the assets, the loans that they have in their existing portfolios. Myself, I mean, I have not. I'm also not an expert, maybe because of the nature of the public nature of the company. But it's an interesting topic indeed.
Yeah, I just wanted to put that out. Do you have something to say, or shall I move on?
Yes, I guess I'm going to shamelessly take the conversation off in a slightly different direction, in that given the extraordinary party that has been raging within the container shipping sector, scrapping mercifully has been something of an academic consideration, at least for a little while.
For now.
And what and this echoes actually some remarks that were made on an earlier panel, that we see actually one of the core pillars of this energy transition that shipping has to address as being the extension of the economic life of vessels. Because, you know, just as was mentioned earlier, I don't think any of us have a clear picture of, you know, what is going to be the standard genuinely green fuel or fuels of the future. And until that crystallizes a little bit, we think that extending the lifetime of assets, minimizing the carbon footprint associated with constructing new assets, so taking a sort of full life cycle approach to the ships is what makes sense. So rather than scrapping being something on the front of our minds, it's really how do we make ships more efficient? How do we extend their life? And then take the next step in the next generation of fuels.
Okay, so that's, Evangelos, you something to say? Okay, well, thank you for bringing me into the next topic that has been discussed all day today, of course, and that's decarbonization being the biggest challenge. And you are tonnage providers making very healthy profits, thank God, finally, in today's market. How would you or how are you planning to address the issue of new fuels and new vessel technologies? You said you're looking into extending, Thomas, the life. Would you be considering then, Stavros or Evangelos as well, to investing in new tonnage? Are you looking to deleverage or giving out dividends or doing a combination of both? How are you addressing the issue?
Yeah, good question. I get this question from our shareholders all the time.
I'm sure you do.
Because we are indeed generating a lot of cash, which, and we have recently reinstated a dividend, right? So that's one capital allocation decision. We bought back stock a year ago. We've invested in young container ships recently. So during this year, we've spent something like $350 million on acquisition of new assets. And of course, we're fixing our ships at lucrative rates for periods of up to 5 years. And, you know, the company is very healthy, cash is coming in, and so on and so forth. It's very challenging today to source good investment opportunities, right? Because we're at the top of the cycle. Existing tonnage is very expensive unless you can get a special deal that has particular characteristics that, you know, make the investment reasonable. New buildings, there have been orders. Obviously, the order book has grown from 7 or 8% to 20 or 21% within the course of a few months. Predominantly, orders have been placed by liner companies themselves, whether it's for conventional propulsion ships or dual fuel, LNG, and things like that. And a few speculative orders by certain owners. Our business model is not to speculate and place orders for very expensive assets with very uncertain outcomes in terms of what fuel will prevail, because that's the question here. Yes. We would order ships, and we want to be at the forefront of ordering the new technology ships when our customers are ready and willing and able to work with us to place orders on the back of charters that amortize the investment at reasonable residual levels. And otherwise, if this time, if it takes a year or 2 years to get there, no one knows at this point, we will use excess cash to delever. We will return money to shareholders, of course, but predominantly we're going to delever and prepare the company to lever up again and enter the new buildings when such opportunities arise.
Thank you. Stavros?
Yes, we're actually looking to do the same, which is all of the above. I mean, it has been like almost 10 years of challenging markets. There has shareholder rewards and reinvesting, not so much on the ship, but growing the companies, I mean, has been put on the back burner. So now it's a good opportunity to do a bit of everything. We have been very swift when we saw the market standing on the right foot. I mean, we have been very swift in sweeping basically the majority of the quality Japanese tonnage, mid-age Japanese tonnage that was out there. We have grown the fleet already by 70% this year alone. We have done that with moderate leverage, and that has also helped the company to deleverage a lot. Actually, all our debt is currently scrap covered, and the average age of the fleet is around 11 years. So, as Evangelos said, we are starting to be in a very good place. And now shareholder rewards, I mean, the share prices of all the public companies have increased at least by 300% since the beginning of the year. So a small part of the reward is already there. And now, I mean, dividends, it's the next thing that we're looking to do. But again, I mean, the formula under which we will do that, it's a big debate internally these days. We want this to be also sustainable as soon as we instate that. We are looking also to invest more on our existing vessels to install energy-saving devices and be able, I mean, to minimize the impact on the speed and competitiveness of the fleet from the upcoming environmental regulations. One thing that we are not actively looking right now is to do new buildings, be it because we are not the hugest believers in new buildings. I do echo what Thomas said before. I mean, we have to see the existing fleets becoming more efficient and running through the end of their life cycles. It's the best way, I mean, to transition to greener shipping. So yes, that's it for us.
Well, I'm happy we're echoing and going full circle with what was said earlier this morning on Eva's panel, that new buildings is not in favor right now. That will definitely help the supply side. Thomas, you have something else to add? Before I ask my banker, what would he like his clients to do in such a high market?
I suspect I know the answer to that
So
one.
do I, but I'd like to hear what he's going to say.
Sure, of course. I can't really add anything more original. I mean, a little bit like Stavros, we've tried everything this year. So we switched on a dividend at the beginning of the year, and we're very careful to calibrate it at a level that we feel is going to be sustainable throughout the cycle. We're delevering, but actually at the same time we're making accretive acquisitions. So we've grown the fleet by around about 50% in terms of number of ships during the course of the year. We've also made small buybacks of shares. So a little bit of everything, but we are acutely conscious that, you know, although this has been the most extraordinary 12 to 18 months, you know, within the industry, this is a cyclical industry. That cyclicality hasn't gone away. And the party will eventually end. We think not for a while, but it will eventually end. And you combine that with the fact that we've got to make this transition to a decarbonized future. There are two, you know, perennial and one new challenge that the industry has to face, and you have to have a strong balance sheet to do that. So again, we're reticent about draining the balance sheet of cash simply because we're building a lot of cash at the moment. Instead, preparing for what comes.
Preparing for the next day is the prudent way to go. Happy to hear that. Well, George, we're all excited to hear what would banks would be looking for in their clients at this point in time, where they're building up cash in their balance sheet. But I would also like to know, would you also be there to assist in their retrofits or helping them with new technology or making their existing fleet, prolonging the life of that fleet as the age of the vessel increases?
First of all, I don't know what our clients will be doing. And it's not,
you as a banker
it's not our role to tell them what to do. And this is because they probably know better than us. They have a very good feeling about the market, the economy, and they are very competent. And history has shown that in the long run, they take the right decisions. And this is what has made Greek shipping so big. The intuition of our clients to act quickly and do the right things. Not necessarily with the advice of the banks.
I couldn't agree more.
But having said that, I don't think it will be a bad idea if an owner of 10 containers decides to sell one or two of them for $50 or $100 million each, especially taking into account what this guy has gone through in the last 10 years, or maybe 12 years. I don't think it will be a bad idea if, especially for containers and dry bulk as well, because there the market is also booming. I don't think it will be a bad idea to sell, because the time will come that the correction will happen, you know. It's a matter of time. I don't know for how long this boom will last, but certainly the day will come that rates will come back to the levels that we knew. Despite the fact that the fundamentals today are much better than how they were in previous booms. The demand and supply balance, in my view, today, for dry bulk and containers, I hear that the order book is now at 26%. I didn't know that it went so high. But I think it's much better compared to 2007 and 2008. I remember the order book there was 60%. I think that our role as a bank is to engage into a strategic dialogue with the clients, discuss about their strategy, offer them what they want in terms of innovative solutions, and certainly funding, because funding will always be extremely important for our clients. Shipping is a capital-intensive business and will continue to be capital-intensive. So, you know, this is where we've been focusing for the last decades, and probably we will continue to do so. As far as new technology is concerned, obviously we would welcome, you know, the new ship, the ship of the future. I'm very positive that this will come, maybe in 10 years or 15 or 20, but it will come. And I'm very hopeful that ABN AMRO will be there to finance those ships when they come out.
I'm sure you will be. You've been one of the most traditional ship owners that is still around, shipping banks, actually.
But having said that, until that time comes, the global trade will continue to be serviced by conventional ships. And the trade will grow because we have a growing population. And there will always be demand for transportation of goods, raw material, oil, finished goods from one place to the other. And that can take another 20 years.
Yeah, that's a good point. I mean, the order book was mentioned, and just to add to what
Go
George
ahead.
said, because I am getting this question, you know, we won't come at a point in 5 years where the existing fleet is going to become redundant, right? There will be a transition, there will be new technologies developed, new ships being built, and actually, you know, for the next 2 or 3 years before the order book starts being delivered, we expect decent demand growth. We at least expect a positively sloped trade growth curve. We also expect ships to slow down as a result of requirements to reduce emissions, which is effectively going to take out a chunk out of the supply. Therefore, this 26% or whatever the number is order book doesn't seem such, you know, as a big threat to the demand-supply balance at this point. It could be well over 50%, as it was in 2008. And the reason it's not, it's because people do not want to go out on a limb, many people, and order ships that may not be relevant 5 years down the road. We're talking about big investments here, and people are, you know, being cautious.
Yes. They're restraining
yeah.
for the first time in many years.
Yeah, that's actually indeed a good point. I mean, there are people with more gray hair than me in here, but who was talking about discipline, not ordering, deleveraging in 2007, 2008? I mean, it's something different.
Greek shipping has shown a lot of discipline over
Yeah.
over these years, so it's amazing.
Can I add,
Yes, please.
Katerina, just some thoughts here, and also pick up on a comment that was made on an earlier panel today,
Of course.
which is that as an industry, we're not very good at promoting ourselves. So, you know, the only time we hit the cover of the Wall Street Journal is, you know, when we get jammed in the Suez Canal, or when there's a supply chain crisis, as there is at the moment, which is, you know, driving inflationary forces. But I think what we need to try to be better about, and this is echoing a little bit, or emphasizing what George is saying, is that shipping is potentially a bridge to decarbonization. You know, you talk about low carbon forms of transport, and shipping carries 80% thereabouts of physical trade
90.
around the world, which is considerable. We're the conveyor belt of the world. We're connective in that regard. And we managed to do it on a ton-mile basis in terms of emissions at a rate which is 50 times lower than aircraft, air freight, 4 or 5 times lower than rail, and 3 times lower, 4 or 5 times lower than road, and 3 times lower than rail. And I think we need to sort of promote that a little bit, particularly, as decarbonization becomes more and more and more of an investment criterion.
Very good point, because I noticed on Deloitte's survey that the ratings, airplanes were high, rail third, and shipping, very close to average. So I think we should be promoting this, very, very huge difference, and we should be promoting, and I think I've been saying this for a long time, shipping should stop promoting itself when we have bad news, which should be promoting the good things we do and what do we bring to the table as well. May I ask if there are any questions before I...
Any questions from the floor, please? No.
Ask one more
We have
here?
5 more minutes.
Yes, we have 5 more minutes. Perfect. Can you please just tell me, you touched upon it, but very shortly, where do you see the shipping markets going in your respective fields? And George, what should your clients or your investors, gentlemen, expect for the next day? And then I have one final question for George before we wrap it up. So where do you see the shipping markets going? I'll start with the Seanergy and Stavros.
If you don't mind, I'll focus on capes, because that's all we do. So,
Yes.
I mean, the fundamentals are very healthy. Many people before me have discussed that in various panels. Demand is looking great for the main commodities that we're transporting, which is iron ore and coal, based on the energy shortages, based on the infrastructure activity from east to west. If you add to that, I mean, the lead on supply due to the environmental regulations, limited yard availability, we expect very good markets. I mean, if investors will stick around, I mean, with shipping, and they're not looking, I mean, to get out, taking out their short-term returns, which they have already realized, I think they will do good. For companies that are able, I mean, that have also clearly defined ESG agendas and are able to reduce risks from upcoming regulations or even benefit from sustainability megatrends, they will do even better. So shipping is going to be a very good place to be, and dry bulks and Capesize will be the best.
Okay, good. Evangelos?
We're obviously in a roller coaster market since end of last year. We've seen the market edge higher and higher every week. We saw record-setting either charter fixtures or box rates going up and up and up. Obviously, this cannot keep going on forever. And the supply chain, which is disrupted at this point, and the congestion and all these things, at some point are going to start to normalize. We, however, believe that for the next 24 months, that is through the second half of 2023, when ships start hitting the water, demand will definitely outpace supply, and we're going to see a consistently strong market. Maybe we correct a bit from the excesses that we've seen, but we expect to be in a very healthy market for the foreseeable future. Now, 2 years in today's world is a very long time, right? You have black swan events that could derail all of any rational thought process. You have energy crisis now in the news that can, create all sorts of issues going forward. But with what we know at this point, we're quite bullish about a strong market. Back in November of last year, I was on a virtual panel, and I said we're entering a super cycle, and my fellow panelists were laughing. right? I think we are now deeply within the super cycle, and at least for the container ship sector, it's not going to be short-lived.
Okay, good to hear. Thomas, would you have something to add?
Exactly that.
Okay, all
Pretty much.
right. You're making a lot of people happy in the room. George, I would like to end with you and really ask you the million-dollar question. Are banks going to be re-entering now that, under the new regulations, new rules? Will banks be re-entering the shipping finance markets in a more stronger footing? And what do you believe for the markets?
Thanks for the question. I will say a few things about ship finance,
Yes.
which will partly explain why many banks have exited the market in the past 10, 15 years. And I will speak from the bank's perspective,
That's what I want to hear.
I think we all agree that shipping is a fascinating business, and we are all very excited to be in this business. However, it faces a lot of challenges, and this is not exactly how many people, even within the banking community, see ship finance. And, for example, one of the challenges is the volatility. The revenues of shipping companies fluctuate very heavily, and the bankers, they don't like volatility, they like stability. Then, we discussed about sustainability, and Thomas made a very good point that ship owners and in general the shipping community should promote what they have done in sustainability. But right now, for a lot of outsiders, shipping is not a sustainable business. Over and above, there is an issue with transparency, and that has to do with the fact that the entities, the SPCs, they are offshore companies. That doesn't promote so much, this. And in many, many cases, in many shipping companies, the corporate governance structure is not as it should be. And for a bank that is in ship finance, there's also another negative, and that's the cross-sell income, which is very limited in shipping compared to other sectors. Cross-sell income is the collateral revenue coming from non-lending activities. That for ship finance is fairly small compared to other sectors of the economy. So against this negative background, shipping has to compete equally with other sectors in a corporate bank, and that could be real estate, energy, manufacturing, food and retail. And, the measure is the return of equity. So the return of equity for the shipping portfolio of every bank needs to be above a certain threshold. If it's below the threshold, it's not good. If it's not below the threshold for many years, it's very bad. And it's been happening because profitability is measured by the revenues, but also by the losses. And in the past, there have been many losses for the shipping sector. And when I say shipping, I also include the offshore, which for a lot of banks, it was integrated into the shipping portfolio. So banks basically cannot afford heavy losses, and they cannot afford low profitability either. And this is a problem, because every bank that is in shipping needs to make sure that revenues are acceptable. The pricing of the shipping loans need to be good enough to reflect all the associated risks of the industry. And at the same time, losses need to be kept at a minimum. And when I say minimum, I mean zero, which is not happening effectively. So it's the main reason that explains why certain banks have exited the sector. And it also explains why ship finance is being directed to non-regulated institutions, because they don't take so much into account the negative stuff that I mentioned earlier. I remember once, and I will finish with this, I remember once I had a discussion with a ship owner 10 years ago, and he was trying to convince me that the 50 million loss that his bank had on one of his loans was pocket money for the bank. And I told him, because of the size of the bank, obviously it was a very big bank, you know, and 50 million is not pocket money, it's a hell of a lot of money. And the 50 million loss can really trigger the decision of the bank to stay or not stay in ship finance.
Thank you. So what you're actually telling us is that it's going to be very difficult for traditional lenders like banks to come back to shipping finance because of overregulation. But you're really tugging at me right now because we've come to this point because a lot of people made a lot of mistakes. And I think everybody has learned their lesson. And I am seeing, at least now, that we are in a high cycle, but banks are being more conservative. And yes, losses are big, but once everybody has learned their lesson, I think if we start being more conservative and prudently looking at projects the way they should be, maybe they would consider this, not tomorrow, but in the short term. I'm a very positive person, and I keep saying that. Banks will come back, I'm sure. They'll find another way. But at least as long as money is out there for shipping, because it is capital intensive in any shape, capital markets, alternative financiers, very good schemes that we heard before, and private equities, I think we'll do very good. Kevin, that's it. Thank you very much. Gentlemen, thank you very much for that. Good afternoon.
Thank you. Evangelos. An end of the conference today. Thank you very much. It's been fantastic seeing you all in person. We're very happy we were able to do it. Thank you to all of our sponsors that you see up there. Thank you for all coming along, to our speakers as well. You're now invited to a cocktail out in the foyer, which is hosted by IRI, the Marshall Islands Registry, and we'll see you again next year. Thank you.